top of the hour, bottom of the hour is a wholesale time of the day. So it's one of our matrix times of the day, correct? Top of the hour, bottom of the hour. So we get to that through the half-hour space. So when we look at the half-hour space, we can start counting what's going on here. Now, this is obviously one of those candles. You might say, wait a second. How is this a 3 candle? Well, how is it not a 3 candle? The price at one stage was here. And the price at one stage was here. So that candle has sold off more than it's bought. I think of that type of candle, especially when the big macro's been selling and we get a big pin here. I think of that as very obviously, a 3-phase. Anybody disagree? Now you may say, well, it's blue, so I'm counting it as a 6. Okay, go ahead, do what you like. But what I'm saying is, this is how I would see this. This is like a spinner candle. And for me, the background, therefore, in this spinner candle environment, this is more likely to be a 3. If this is a 3, and if you're right about this being a 3, then of course, if this is a 3, you can see the blue line's not in dispute and the red line's not in dispute. So if the blue line's not in dispute, then the blue line is 100% a 2, and the red line is 100% a 1. Well, if this is a 1, 2, 3, then of course the trade is a 4, which means buy oil into a 3 o'clock low, yes or no? Buy oil into a 3 o'clock low, yes or no? In other words, they're going to manipulate oil prices down into 3 o'clock or after 3 o'clock to buy oil from. Now, I'm not saying it wasn't the most ferocious rip you've seen, because it was pretty brutal. But does that look like they drove the oil price down into these little structures here with this enormous volume to appear to frighten as many sellers into that short sale as possible? Frighten as many sellers. Get them all selling. Get all the buyers running for cover. Get them selling. Get sellers selling even more. To do what to them? Well, according to Jack Ryan, they're doing this to take the price up. It doesn't feel like it at the time, does it, Miguel? Certainly doesn't feel like it at the time. But look at the net book. Look at the net book. Can we all agree that even although the short-term book went offered here, can we all agree that the net book was actually still bid? Can we all agree that that delta therefore looks like a trapped sell side delta? So if we look at that bigger picture in the background, does that delta look like a heavy, heavy short delta that's now been trapped on the sell side? In other words, if we did our exercise about spotting trapped sellers, we would probably be highlighting this area, for example. We'd probably have highlighted this area here. Still probably this area, because the net book is still bullish. So we probably have trapped that guy there. You see that they're still selling. The book goes bullish again. You say, well, they're trapping sellers in all of these low edges here. So what makes you think this is any different? Just because of the volume? Just because of the volume? Just because of the depth of move? This is not a big move for commercials to buy into, guys. This is not a big move. Stop thinking that 5 ticks or 10 tick stop runs are big moves. They are not. And what happened to the oil? Did they get that big trade right or what? So this was all potentially one trade. This whole entire area was one trade. It wasn't a series of individual trades, was it? It was one trade. And obviously, based on that one trade, did they make a fortune? Sure, it's $1,000 to the upside on that buy side pop, and Jack Ryan called it. If you agree that Jack Ryan did call it, Jack Ryan called it. So this was a scare. This was what you call a frightener bar. So what they're doing is they're trying to frighten you away from being a buyer at any stage. You might as well be a seller after all. But that frightener bar was the biggest volume of the day. Did you see what it was? Yesterday's RGL. Yeah? It was yesterday's RGL price. It was the biggest volume of the day. The demand line was still visible. See it? The demand line's still visible. The dollar is still visible. And yet they ran it so hard to the downside that it panicked every single person out of their big, massive buy trades here, wasn't it? Look at that. So they went for the squeeze against the longs here so that they would put the positions into that price with this enormous volume coming in as it broke structure. And they basically mopped up every single buy opportunity right there, didn't they? And they ripped it right off that price for $1,000 on several thousand contracts. Several thousand contracts. And Jack Ryan called it. Jack Ryan called it. Starting to trust Jack anymore? Are you starting to trust Jack at all? It's right there. Now that's assuming you made the correct read on this dollar candle here. That sell in the background, this dollar candle here, the half past coming into that area, the idea of what's going on, the idea that this is a developing storyline, the idea that they're going to try and do something into this candle here. And you'd imagine that that red line is going to absolutely tank following this phase from the 1, 2, 3 structure finishing into that area. And that's exactly what they did, isn't it? It's exactly what how it played out from that point. You know, and you watch that evolving, don't you? You don't just come into the charts at exactly that point and try and find a trade, because you probably missed it. You've probably missed the trade by the time you look at it if you wait to the very end of the move. And that's probably one of the challenges. You've maybe missed the deal when you say, well, that's that trade's finished. You know, because if you started to look at it at half past, it's already gone well, it's already started to come in from the bottom edge. So when we look at that as an idea, we start thinking about how they're manipulating price to achieve an outcome. You know, how they're manipulating price to achieve an outcome. They're trying to position themselves into a trade that makes money. And if they don't position themselves into a trade that makes money, they simply don't take the trade. They don't take the deal, do they? They wait for something else to come along. We were right about this top line grail. Looks like they've stopped trying to do the grail, so that's a bit disappointing. So we got a couple of sells. We made some monies. I got twice into the sell. I sold some more at 26s. It came down to a low price of 21s, but the selling came in too hard. So we came off at 22s, 23s. Only made 4 ticks on it. So they're desperately trying to find somebody to come back in again here. So that's disappointing. Now, on the basis that it's disappointing, you might say, well, let's reevaluate what's going on right now on the right-hand edge. The dollar is still offered. You can see that the dollar, whilst we've been able to sell some top edges and make some easy money on the short sell on the euro, the dollar is still technically offered. We are still technically in a 3 phase on the dollar. Now that the oil's moved, we've got a 4 on oil. And because the bond is still in a 5 phase, we've basically now got the idea that we've got the bond is still in a 2 phase because we're still getting the bids on the bond. So we've technically got a 2, 3, 4 just now in the market, haven't we? The red line's dropping, which is a 4. The blue line's dropping, which is a 2. And the dollar's dropping, which is a 3. 2, 3, 4. So the trade that's actually starting to set up still is the top line sell on bonds. So we go to our bonds and start challenging that narrative. Top line sell on bonds, does that make sense? Sure, it's just part of the grail trade. But obviously they've stopped doing the grail trade temporarily, which means, of course, that this is going to be a little bit harder to just get involved in. There's too many sellers, so they're encouraged to take the price higher, aren't they? They're encouraged to take the price higher because there's too many sellers. They can get a really good price by not marking up. See the difference? If there's too many sellers, they'll buy on the passive. The whole point about the grail trade is we want to buy them on the market order to get that higher price. At the moment, they're buying on the passive bids. So they don't have to take the price higher. They don't have to go any, they don't want to take the price higher. Remember, if you buy at higher prices in a spread, you're getting a less valuable spread. So this is where it's getting a little bit more difficult for us, but it's still a sell. I'm still on the trade. I'm still selling higher prices, guys. I'm back in another short again there. And stops going in at break even. Why not? Stops going in at break even. Third trade in a row, guys. Third sell in a row. Not going to lose any money on any of them where stops are at break even. So worst case on this one, I'll scratch it. Scratch it, scratch it, scratch it. I got a price, by the way, of average price of 25. I didn't get that. So it's just above 25 as my average price. I got some at 26 and I got some at 25s on the Ultra. So my average price is just above 25. So I'll probably just scratch it at 25 if I get traded at 25 for a very, very small scratch profit.